Hello and welcome to the look ahead for Friday, the 19th of July with me, Fiona Cincotta, Senior Market Analyst at City Index. So first up tomorrow, we'll be looking at UK retail sales data. We've also got German PPI inflation figures, Canadian retail sales in the US session, as well as Federal Reserve Bostic will be speaking. Sorry, Federal Reserve official Bostic will be speaking. So just starting off with UK retail sales, expectations are for sales to fall 0.4% month on month in June after rising 2.9% in May. The data comes after we've had several major data releases from the UK this week, including inflation, which was stickier than expected, particularly the service sector inflation, which remained unchanged at 5.7%. We also had UK jobs data in today, and the wage growth actually fell to its lowest level in 2 years at 5.7%, but that's still pretty high and probably a level that the Bank of England is going to remain uncomfortable with, even if it is on the right trajectory. Now, obviously, wage growth is intrinsically linked to service sector inflation. I'm thinking that the Bank of England's going to want to see those figures cool further before they start cutting interest rates. Now, as far as market expectations for rates cuts are concerned, we started this week with the market pricing in around a 50-50 probability of a rate cut from the Bank of England. That reduced to 30% after the inflation data has just risen slightly to 40% after that cooler wage data. But I think if we get weaker than expected retail sales, then we could see that figure, that probability of an August rate cut rise further, which could pull the pound lower. But I do think that the Bank of England will probably want to wait until they have more confirmation that that service sector inflation is cooling. So we could really be looking at a September rate cut from the Bank of England. Now, if we just go here, this is the pound US dollar, which has seen quite a bit of action this week. Now, as we can see, we've sort of been able to remain within this rising channel, which dates back to the 19th or to mid-April. It's just trouble there. We hit the upper band of that rising channel. It's just sort of testing around that 130 level. Obviously, that's quite a big level as psychologically speaking. We're finding this consolidation, this slight move lower that we've had today, actually pulling the RSI out of overbought territory. Now, if we get weaker than expected retail sales, we can in fact see the pound US dollar move lower. As far as support is concerned, there is this level here, which is the 129, which is the March high. But if we do get stronger than expected sales, which is also a possibility if we think about sort of, what's been going on as far as, the Euros and Wimbledon, plenty of events that shoppers would have been out shopping for. So if we do get stronger than expected data, buyers are going to be looking to take out this high here, which is the 130.45. That's the 2024 high, and above there, then we get the 131.35 level, which is the July last year high. Just whilst we're here, let's just take a look at the FTSE. So here we are with the FTSE. Okay, so the FTSE has been trading in this falling pattern. Sorry, just bear with me. Here we go, whilst I get this on the screen better. So we've seen the FTSE has been trading within this falling triangle. We've found a very sort of solid support here around the 8125 level. But actually today, that weakness in the pound has helped lift the FTSE. It's just testing on the 50 SMA as we speak at the moment, around the 82.60 level. If we can get a rise above that, that's also sort of rising above that falling trend line, then that's going to bring 83.64, which is the June high, back into focus. If we do get, as I said, stronger than expected retail sales, might give the pound a boost, and we could actually see the FTSE coming lower On the downside, I'd be looking out for that 81.25 support. You can see how solid that support's been across the past month or so, past 6 weeks. If we get a break below there, then 8,000 will be the next level to watch. I'm just going to pick up the euro US dollar here, because as I said, we do have German PPI data coming in, which is expected to rise just 0.1% month on month, and that's after coming in flat last week. In the previous month. Now, this is the euro US dollar. Obviously, we've had the ECB interest rate decision today, where the ECB left rates unchanged as expected at 3.75%, but also suggested that the door was wide open for moves in September, remaining very data dependent and rather vague in their guidance, although we do really know that the next move by the ECB is going to be a rate cut. They clearly don't want to be cornered into a date like they were previously in June, when they cut rates. But I think expectations are pointing towards a September rate cut from the ECB. We saw inflation this week cool to 2.5%, so it's moving back down towards that 2% level. As I said, German PPI is expected to remain weak. It's not causing any red flags as far as that's concerned. So obviously, we've seen this run up in the euro US dollar. That has been partly a US dollar weakness story as well. But if we get stronger than expected German PPI, then maybe we'll be looking to see the euro US dollar rise towards that 109.80 level, which is the March high, before heading towards 110. Obviously, this is going to depend on what's going on with the US dollar as well. If we get sort of the more dovish comments from Bostic, then we could see this pair rise as well. On the downside, a key break on the downside needs to be below the around 109 level, 109.15, 109. If we get a break below that, then that could expose the 200 SMA at 108. So just also going to pull up here USD CAD, because we've got Canadian retail sales, which again are expected to be 0.0% after rising 0.7% in the previous months. Now, we've seen this pair. To be fair, this has been very range bound. Expectations now, the Bank of Canada expectations rising, that the Federal Reserve are going to cut interest rates, as well as the Bank of Canada cutting rates again. So we have seen the pair sort of relatively well supported on both sides. Rate cut expectations exist for both the Fed and the Bank of Canada. Potentially, very soon, the Fed could be as 100% priced in that they'll cut rates in September, whereas Bank of Canada potentially could cut rates before, which is why we've seen the price rise off this low here of 136. Taken the 136.60 level, and buyers just hovering around here now. Buyers, if we do get stronger than expected retail sales, find that we get a retest, that we get that 136, that 136.50 level, and that 136. Really need to break below that 136 to this breakout of its holding pattern. On the upside, we'd be looking for the 137.80. That's sort of like the June high. If we can get a break above there. But I think that's looking rather unlikely at the moment, given the whole dovish surrounding the Federal Reserve and the cooling US inflation data that we've seen. Next week, we've got US core PCE inflation data. We've also got US GDP preliminary for Q2. Now, that could come in stronger than Q1, in which case then we might see a little bit of strength return to the US dollar. So I do hope that you like what you've seen, and if you do, then please do give this video a like. And if you would like to receive more videos like this, then please do subscribe.